So I tested the ICT Fibonacci combined with the market structure on both crypto and Forex. And this is a video where I'll be showing you how it actually works. In ICT trading strategy, there is something called OTE, Optimal Trade Entry. The rule is simple. Only buy at discount or sell at premium. In both cases, between 62 to 79% of the Fibonacci retracement. Now, on TradingView, this is the Fibonacci level by default. So what I'm going to do is to change this to the ICT level. I'm just simply going to click on it, click on settings, and you see this value is here. This one I'm going to modify. So these are the levels. For example, the 618, I change it to 62 and change the rest of the value here. So if I click on OK, this is now how it's going to look. Simply drawing the Fibonacci will make it look this way. Now, this is how it works. So in an uptrend, when price retraces into the OTE level, which is between 0.62 and 0.79, this is where I am looking to buy. Again, if I had to mark this out, from 0 to 1 is the range we're looking at. Between 0.5 to 1 is my discount zone. And according to Fibonacci, we should only buy in discount zone between this, when price retraces to this level. This is my premium zone. In a downtrend, the opposite is the case. We want to sell or take a short position at this level between 62 and 79. And this also is our take profit levels. Okay. The question now is, how do we know which retracement level is premium and which one is discount? This is where market structure comes in. When price rallies and pulls back, it makes a swing high, then it breaks that swing high. We are in an uptrend. If it pulls back again, this is where we start considering an entry. So this is where we pull the Fibonacci from the bottom swing that broke structure. Then we'll start considering an entry in the Fibonacci OTE level. This is where we want to buy and target these highs. If you look at this, in an uptrend, here, 0.5 is the halfway mark. So from 1 of the Fibonacci level to 0 is where we'll have our premium and discount zone. In an uptrend, this area from 0.5 to 1 is our discount zone. This is the area we should look to take buy position, especially between 62 and 0.79. And here is the premium level. In a downtrend, the opposite is the case. So in this case, we have price makes an impulsive move to the downside. Then it makes a swing point, then breaks that swing point. This is the confirmation that we are in a downtrend. All we want to do now is to pull our Fibonacci again from the last swing to when it starts turning around. And we want to look to buy when we have a pullback to that zone and target these take profit levels. In the same way, this is the premium zone. This is the zone we want to sell, and this now is the discount zone. In a ranging market, price is making relatively equal highs and equal lows. What do we do here? There are actually two options. One is to just keep away from the market. Don't trade a ranging market. The second thing you can do if you want to really trade ranging markets is to drop to the lower time frame. Let's say you're on the 1 hour time frame. You want to drop to, say, the 5 minutes or the 3 minutes time frame and look for internal structure. So if this was a 1 hour time frame, on the 5 minutes or 3 minutes, I can be seeing structure this way that I can trade to the downside, and also structures I can trade to the upside. This is trading internal structures on the really low time frame. I will show you how this works on a real chart, which we're going to get into now. But the rule is only trade with structure. Uptrend, buy in discounts. Downtrend, sell in premium. Use the 62 to 79% zone to for your entry, again, this is the OTE level, and always target a minimum risk reward of 3 hours. And make sure that you are trading the right break of structure and not liquidity sweep. Now let's go to the real market. We're going to do Forex first, and we'll come back to do crypto. So for the Forex market, let's look at GBP JPY. Okay. If you look at this market, so we are in an uptrend. This is a daily time frame. So here we broke structure to the upside, then did some consolidation, which is also making higher highs and higher low. Then we did another rally, and we are pulling back right now to continue. Now, looking at this, what can I take away from this? So the market this way has retraced downwards, okay, into this zone, and is trying to go up again. So my target for this market is simply this high. I'm going to simply target this high because we've broken structure to the upside here. We've had a retracement here, and we are trying to rally up to this particular point. So this is where I start looking for buying opportunity to take this market up. If you also look at the internal structure here, we had a swing high, we had a movement upward, down, we broke structure to this particular side at this point. Then since then, we have not been able to go above that high. We made another low, we didn't go higher than this, and we have sort of been going down from here. This is the last high, this is the low where we are at now. But if you look at this, we are still not yet in a downtrend until we break this particular low here. This is when my orientation is going to shift to the downside, okay? But right now, it is still, my orientation is to the upside. What I will do here now is to go to the lower time frame, let's say to the 4 hours, and see what the market is saying. Now, on the 4 hours, what we'll look at again is market structure, but this is not pretty clear here. So I'm still going to go drop down further to the 1 hour. Now, on the 1 hour time frame, mind you, my target is this line here. On the 1 hour time frame, what do we have? So we have market structure. The market has been making lower highs and lower lows. Then it moved up and broke structure this way. So since structure is broken to the upside here, what I will now do is to pull the Fibonacci level from the bottom here up to this point. And I'm looking to enter this market at the OTE level. Now, another thing I can do for confirmation is to pull out the Stochastic RSI. So let's see how this goes. So once the market interacted with the 6-2 level, I'm looking to make entries. And the confirmation is when the Stochastic RSI pulls back into the 20 level. Now, I only want to buy, again, between the 6.2 and the 7.9. So I cannot enter this trade at this time because we are already above 0.5. Then again, I could place an order that when this market retraces back to this zone, then I can now buy. So long position from here, I can target this particular low here, and I can target this high. Again, I'm looking for a minimum risk reward ratio of 3.26. Now, the market came down again, and we had another confirmation from the Stochastic RSI. And from here, the market actually gave multiple opportunities to enter, confirmation from the Stochastic RSI. Then we continue to rally up. So if you look at here again, we have another break of structure because this is the last swing high, and the market at this point broke structure. We can start looking for another entry here. This is the low that led to this break of structure. I'm still going to pull my Fibonacci 2 from this point to this point and look to enter at that level, confirmation from the Stochastic RSI. So the market went higher without giving a confirmation, and we have actually hit take profit at this particular point. What I will do next is to consider this low and this high again, and I want to look for entry at the 6.2 level, confirmation from the Stochastic RSI. So at this point, we had that happen. The market came down, the Stochastic RSI confirmed it, And this is where I will take another entry. So long position from this zone. I can target this last swing, then make sure I'm looking at least a minimum of 3 hours for a risk reward. So this rallied up quickly. Now let's look at how this plays out in crypto as well. The crypto we're going to look at is Solana. Starting from the daily time frame, what is the market seeing here? Let's look at the general condition of the market. So here we broke structure to the upside, okay, which simply tells me, okay, the market is moving up. It came this way, then did all this consolidation, moved up, broke structure here. We should expect it to come this way and move up higher, but it did not. What happened was that it broke structure again to the downside. So you can see the break of structure right here. This is again on the daily time frame. So we'll have a break of structure to the downside. It means that I should start looking for a reversal from this point, from this high. If I put the Fibonacci again to this low. So from this 6.2 here at this point, this 6.2 level, I'm going to draw a line there. So this level here is a level where I'm going to start considering to take a short position. But from here, because we had a break of structure, I should expect a retracement to this zone and go lower, right? But what I'm going to do is to see how I can trade. It's to see how I can trade from here all the way to this particular region. So let's see how that works. To do that, I'm going to drop down to the 4 hours or even the 1 hour time frame. So on the 1 hour time frame, there are countless multiple trades we can actually take here. So from here, if we zoom in lower, we see that the market here made a low, a high, a low. And once we broke this particular high here, we have a break of structure at this point. Break of structure at this point. So I'm going to do the same thing. Pull the Fibonacci, take it from the low to the top. And when price retraces to this level, you can see that the Fibonacci confirmed it. But I might not take this trade because I may not catch it with at the 6.2 level. But that is okay. Now, if you look at the next one, the market moved again. So the market is giving multiple opportunities. And we did a break of structure at this point here. Then pull the Fibonacci level from the bottom to the top. This is 6.2 confirmed by the Stochastic RSI. This is where we enter the trade. And you can see it rallied and hit take profit. There are multiple entries given to us. Now, if you look at this one again, we made a low here, a high, a low, another high that broke structure. So if you take this again and put your Fibonacci level from this point to this particular high, this is a retracement to consider, and the market gave us an entry confirmed by the Stochastic RSI to even take this market, take price going higher. If you look at this, there are multiple opportunities to keep on trading this internal structure to the upside and to the downside. Now, when we broke the structure here at this particular point here, the market started retracing. We created a low here, then a high, went below it. This is where to start looking for opportunities to trade the market down. And at this point, when I'm trading the market down, what do I do again? I'm still going to go ahead and pull the Fibonacci from this level to this level and draw out this 6.2 level, meaning that I will only want to trade from this top till I get to the 6.2 level down. That is when I start considering an upward movement again. Then what do we have here? We have another break of structure to this side. And if I pull out the Fibonacci from the bottom to the top again, I'm interested in trading this zone all the way up and trade this zone all the way down. When we get to the 6.2 level, that is when I start considering again to go higher. If you look again, what do we have here? We have a break of structure here, and we had another retracement again to the 6-2 level. You can see that here from this top to this 6-2 level, and we'll move higher. And right now we are almost at the 6-2 level in the daily time frame. So here we might start considering a retracement down, or see if the market can trade again into the 6-9 level on the higher time frame. So using this strategy, we can trade both on the higher time frame and the lower time frame. And I hope that you really understand this. This is exactly how I tested the ICT Fibonacci across crypto and Forex. And once I combined it with market structure, my entries got cleaner and I stopped forcing trades. But the key here is to really understand market structure. If you get market structure wrong, this is not going to work for you. So if you want the full market structure breakdown that makes this work, you should watch this next video. Or the other thing you can do is to grab the free step-by-step course in the description of this video. You can also join me live here every Monday for a breakdown on the trade I'm taking, my entries and my exits on both crypto and Forex.